أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم السلام عليكم ورحمة الله تعالى وبركاته. My name is Ahmad Mushrif Abid bin Masrul and my friend Ahmad Hazik bin Ahmad Hilmi and Muhammad Faris bin Nur Faizal will present to you about riba in personal loan in the banking sector, a case study of Maybank. So for the introduction for this topic is I will explain to you about what is riba. The idea of riba or interest is crucial in the field of Islamic finance, especially when it's come to personal loans provided by traditional banks. Riba is considered exploitative since it unfairly benefits the lender at the expense of the borrower, although being expressly forbidden in Islam. So, as we know, Maybank is one of Malaysia's top financial institutions, provide both conventional and Islamic banking service to meet the different demands of its client. This dual strategy enables Maybank to meet the financial needs of its customer while adhering to Islamic ethical principles. So, this project will investigate the complexities of riba in the context of personal loans provided by Maybank. So it will look at the impact of interest on borrowers, ethical consideration from an Islamic perspective, and the step Maybank has taken to provide Sharia compliant alternative. So let's talk about the definition of riba. What is riba? Riba is an Arabic word used in Islamic law that roughly translates to usury or interest. It refers to unjust exploitative gains made in trade or business. So the definition of riba and its ruling are derived from various sources, including Al-Quran and the Sunnah. So, in the Quran, in Surah Al-Baqarah, verse 275, Allah says, those who consume interest or riba cannot stand on the day of resurrection except as one stands who is being beaten by Satan into insanity. That is because they say trade is just like interest. But Allah has permitted trade and has forbidden interest. So, one famous hadith narrated by Jabir bin Abdullah states, "The Messenger of Allah cursed the one who consumes riba, and the one who pays it, the one who write it down, and the one witness to it, and he said, they are all alike." So the reason behind prohibition of riba in Islam, there are three reasons. The first one is ethical reason, second one is economic reason, and the third one is social justice reason. For the ethical reason, there are three types. Exploitation prevention, which is riba is viewed as fundamentally exploitative. The second one is unjust enrichment. So riba breach the Islamic principle of earning by labor and risk sharing. And the third one is fairness promotion. Riba produce an imbalance in which the lender receive a return regardless of the borrower's success or failure, which is essentially unfair. And for the economic reasons, there are three types also. Encouraging risk sharing, which is Islamic finance encourage risk sharing to guarantee that all parties participating in a transaction have a vested interest in the outcome. The second one is economic stability. So as we know, riba can exacerbate economic instability by encouraging excessive borrowing. And the third one is resource allocation, which is interest-based financing can lead to inefficient resource allocation. And the last reason is social justice reason. So, social justice reason, there are two types. Reducing disparity, which is riba can exacerbate wealth disparity by shifting wealth from the poor to the rich. And the last one is promoting social welfare, which is the prohibition of riba is designed to protect the disadvantaged from financial exploitation while also promoting social welfare through fair and just economic practices. So let's move on to the impact of riba on economy and society. The impact on economy, there are four types of impact. The first one is reduced economic productivity, which is riba has a negative impact on saving and investment, resulting in lower economic productivity. The second one is inflation and demand. Interest inflated expense have a negative impact on demand because rising price dissuade customers, hence reducing economic activity. The third one is money concentration. Riba-based systems tend to concentrate money in the hands of a small group of people, impeding the flow of wealth across the economy. And the fourth one is stunted economic growth. When money remains concentrated in a small number of people rather than being distributed for profitable investment, riba can result in a slowdown in the rate of economic growth. And for the impact on society is the first one is exploitation of the poor. Riba-based loan frequently abuse the poor, worse their poverty. And the second one is income disparities, which is riba can significant incomes disparities by letting the wealthy to acquire more wealth through interest, while borrowers struggle to repay mounting loans. And the last one is short-sighted investment, which is riba-driven investment might result in aimless and short-sighted economic activity.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Haziq bin Ahmad Hilmi, and now I will present to you about an analysis of Maybank personal loan products. First of all, Maybank offers a variety of personal loans designed to meet different needs such as home renovations, education, medical expenses, and vacations. There are two main categories of loans, which is secured loans. These require collateral such as property or fixed deposits. Secured loans generally offer lower interest rates compared to unsecured loans due to the reduced risk for the lender. Meanwhile, for the unsecured loans, these do not require collateral but come with higher interest rates due to the increased risk for the lender. Some of personal key loan product from Maybank include: first, Maybank personal loan. This traditional loan features fixed interest rates with amount ranging from Rm5,000 ringgit to 100,000 ringgit and a maximum repayment period of 6 years. The fixed interest rates are competitive, starting as low as 6.5% annually. This loan is popular among individuals needing quick access to funds for various personal expenses. And the second loan is Maybank Islamic Personal Financing I. This loan is designed to comply with Sharia law, avoiding the concept of riba. Instead of interest, it uses profit rate system. Loan amounts range from Rm1,000 to 150,000 ringgit, with repayment period up to 7 years. This product appeals to those who want to ensure their financial activities align with Islamic principles. And the last one is Maybank Easy Pay Plus. This is a flexible payment that allows customers to break down purchases into affordable monthly installments. It offers 0% interest rates for promotional period, usually up to 12 months, after which a standard interest rate applies. This product is often used for larger purchases or unexpected expenses. It's particularly useful for managing short-term financial needs without the immediate burden of instant interest payments. Now, let's identify elements of riba in the Maybank's loans. Riba or interest is explicitly forbidden in Islamic finance. However, many traditional personal loan products, including those offered by Maybanks, incorporate elements of riba. First of all, let's see the interest rates. Conventional loans from Maybank offer both fixed and variable interest rates. For example, the Maybank personal loan has a fixed interest rate that remains constant throughout the loan term, varying from 6.5% to 8.0% annually depending on the loan amount and repayment period. These fixed interests embody the concept of riba, as it involves predictable ongoing interest payments. Variable interest rates, on the other hand, fluctuate based on market conditions, adding another layer of financial uncertainty for borrowers. And the second one is about fees and charges. In addition to interest, Maybank charge various fees for personal loans such as processing fees, early settlement fees, and late payment penalties. These fees can be seen as exploitative if they result in unfair benefits to the lender at the borrower's expenses. For example, a processing fee typically amounts to 1% of the loan amount or a minimum of Rm200 ringgit. Early settlement fees may discourage borrowers from paying off their loans ahead of schedule, further trapping them in the cycle of debt. And then let's take a look at Islamic Financing I. This product avoids traditional interest by using a profit rate system in accordance with Sharia law. However, it is crucial to ensure that this profit rate does not merely rebrand interest. Islamic finance experts emphasize that profit rates should be carefully structured to avoid mimicking the characteristic of conventional interest rates. Ensuring true compliance with Islamic principles requires transparency and adherence to ethical standards in all financial transactions. Now, let's take a look at customer and ulama opinions on Maybank loans. Customers appreciate the quick and easy application process and the prompt disbursement times. They also find it convenient to manage their loans through Maybank digital platforms. However, some customers have expressed concerns about the high total cost of loans due to accumulating interest and fees. For instance, one customer review in 2022 highlighted the unexpectedly high cost of the loan over time, which was attributed to the compounding effect of interest and additional charges. Financial experts evaluate personal loans based on their economic implications and regulatory compliance. In Islamic finance, experts also assess adherence to Sharia principles. Studies suggest that while Maybank Islamic personal financing products are designed to avoid conventional interest, there is a need for greater transparency and stronger alignment with the Sharia law. Prominent Islamic scholars like Shaykh Yusuf Al-Qardawi and Dr. Muhammad Imran Ashraf Usmani have emphasized that any guaranteed return on loans that increases over time constitute riba and therefore prohibited. They argue that riba exploits borrowers and leads to unjustment and enrichment of lenders, which is contrary to the principles of justice and equity in Islam. This scholar stressed the importance of fostering partnerships and shared risk in Islamic finance, rather than placing the entire burden on the borrower. They advocate for financial products that facilitate mutual benefit and shared responsibility.
Bismillah. Okay, now we go to the Sharia compliant alternative and solutions. There are several alternative Islamic finance products that can be used for personal loans while adhering to Sharia principles. Okay, number one, Qardul Hasan. This is an interest-free loan extended to those in need, often by private parties, social services agencies, or firms as a benefit to the employees. The lender cannot change any interest or premium above the loan amount and also cannot gain any advantage from the loan. Some financial institutions offer Qardul Hasan products that charge no interest but do include a management fee. And now, secondly, is Murabaha. This is a cost plus profit arrangement where the financier purchase an asset and resell it to the borrower at the predetermined price that includes a profit margin. So the borrower pays the financier the pays in installment. So now go to the Ijarah. Ijarah is an Islamic leasing arrangement where the financier purchase an asset and lease it to the borrower for a specific rental fee and period. At the end of the lease, the borrower can purchase the asset. Next, practical applications of Sharia compliant personal loans involve various Islamic finance products and principles that align with Sharia law. So these applications ensure that financial transactions are conducted in accordance with Islamic teaching. Now, Number one, Islamic finance product. Syariah compliant personal loans are structured using tawarruk, murabahah, ijarah and tawarruk to provide financing without interest. Number two, benefits of Islamic personal loans. These loans offers benefits such as lower late payment fees, no early settlement fees, and fixed repayment amounts throughout the loan tenure. Number three, Sharia compliance. So Islamic personal loans adhere to Sharia principles by avoiding practices like charging interest, like riba, engaging in speculative sales, gharar, and involving exploitative activities, zulm. Number four, application process. To apply for an Islamic personal loan, individual need to meet the eligibility requirements similar to the conventional loans, provide necessary documents like IC, salary slips and bank statements, and then choose from repayment options like salary reduction or auto debit. Okay, now challenges in Islamic finance. So number one, lack of standardization. Each Islamic bank has its own Sharia board that evaluates new product, leading to a lack of standardization across the industry. So this process should be streamlined and standardized to minimize time, effort and also cost. So number two, liquidity management. There is a shortage of Sharia compliant liquidity, instrument and interbank markets. Central banks should adopt more effective instruments and policies for Islamic banks and provide a lender of last resort facility. And number three, risk management. Islamic banks face various risks such as displaced commercial risk, equity investment risk, rate of return risk, and Sharia non-compliant risk. So they need to develop proper measure, controls, and risk management infrastructure. So the solution that we can do is in standardization. So we need to develop a centralized Sharia board or harmonious Sharia standards across jurisdictions to ensure consistency in product approval and Sharia compliance. So the next solution is in liquidity management. Central banks should create Sharia compliant money and interbank markets by issuing short-term instruments and providing a lender of last resort facility. And the last solutions for the risk management is Islamic banks should develop proper risk management frameworks, including Sharia compliant hedging instruments to mitigate the various risks. Yes.
In conclusion, we strongly suggest that Islamic finance must strictly follow Sharia principles, innovate alternatives to riba, strengthen regulations, educate consumers, standardize practice, and prioritize ethical conduct for credibility and sustainability. That's all from us. Thank you for listening. Assalamualaikum warahmatullahi wabarakatuh.